Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex, and today I'm just going to go over some key markets, talk about the stock market, the key indexes, go over some acquisitions that are going on in the markets and how you could possibly trade them, talk about currency in relation to the stock markets, and also review the crude oil market, as they do have a huge impact on how we should be trading the global marketplace. Alright, so let's go ahead and move on to our video. Alright, for starters, like usual, let's go ahead and start by reviewing the dollar index. Dollar index is starting off April 4th with a bit of a flat pattern. Again, nothing too major. We will probably see a breakdown, as you guys can see. Let's zoom back a bit. Let's examine the technicals. For starters, you got a pennant pattern forming up, at least over the short-term chart, and we do have somewhat of a break right below that pennant pattern. However, since that pennant pattern is relatively over a short time span, if you guys go ahead and look at the day's trading session, the 1 day, and pretty much you go ahead and zoom in, and April 4th, I mean, we haven't been trading for that long, so again, you gotta take this with a bit of scrutiny here. We've only been in for a couple, like, I don't know, maybe a couple hours or so. So anyway, that just comes to show that this trend line being broken is pretty important, but it could recover. The next trend line I do want to point out is this one as well. So this one is much more important, and it's judging by how we haven't been able to break it yet. Just gonna have to watch this one with scrutiny. We did break the pennant pattern to the downside, but we also needed to break this trend line on the multi-hour chart. Alright, now let's go ahead and zoom into the next chart, which is going to be the Euro-US dollar market. The Euro-US dollar is trading relatively flat. Now if the Euro actually strengthened, then of course the US dollar would weaken drastically. Now let's go ahead and zoom back and look at the multi-month chart, and right now we are looking at somewhat of a flat pattern. We aren't really breaking the 1.424 area that much. We need to break that area for us to continue sailing higher, and since we're not breaking that level, we're just trading in somewhat of a sideways pattern. You just got to watch that very closely. If we could break it, that would imply that markets at the dollar index will go lower and the Euro-US dollar will continue trading higher. But we'll just have to see. I mean, we just got to examine it very closely, and as long as nothing major comes out of Europe, we don't see any risk of debt default, and the U.S. Federal Reserve keeps on pumping in free money into the economy. We're still fighting wars, and our inflation strategy stays in place, along with our excessive spending strategy in the government and at the Federal Reserve, then more than likely you'll see the dollar index continue to lose ground in the global marketplace as investors seek low or more like higher interest rate environments, or environments that pose no inflationary risk. Places like Japan, but since the Federal Reserves are more like the central banks of the world are manipulating that, you really couldn't consider Japan a low interest rate, low inflation environment. But places like Europe, where they have really limited inflation, places like that's where the dollar index really loses out in value. So again, let's go ahead and move on to our next chart, which is going to be the US dollar Japanese yen pair. Now the US dollar Japanese yen pair initially started off very strong, but as you guys can see, it has broken this key trend line right here, and that's pretty bad. You basically got to break below the flag pattern. Flag pattern is generally basically a break below the flag pattern. There's generally a bad signal if you guys go ahead and pull up the 10-minute chart. Once you see another candlestick following this candlestick, that should confirm to the downside and imply a weakness on the US dollar Japanese yen pair, at least over the short term. If it can hold up, and then maybe if this could go back to the upside, at least in this candlestick alone, then perhaps we could reverse. But remember, this candlestick is going to be very important in the following one after that. Now, as far as the dollar index is concerned, I want to go ahead and review the dollar index again. Just point out the longer term trends right now. The longer term trend is kind of the short term. We do have a positive short term trend in place still, according to Trade Triangle Technology, but that should only last for so long. And we could probably retest the 20-day moving average for, just tap it a little bit and touch it a couple times. But I'm not really expecting anything out of the dollar index, at least for the time being. We still have permanent open market operations going. We're still involved in the Middle East, and we haven't figured out a way to reduce our spending in a realistic manner and in a way that would actually curb our deficit spending. So just the markets are basically telling you that we're not buying it, and until somebody can do something in the White House implying that we could actually trust some policy reform and see some action coming out of the Obama administration to keep deficits in control, chances are the dollar index will continue going lower. Now I'm going to go ahead and review the Treasury bond market, and Treasury bond market is relatively flat. As you guys can see, you don't see much out of the Treasury bond market. If we go ahead and look to the 6-month chart, again, relatively flat. Now, pretty much as long as the dollar index, if the dollar index is able to find some support at around this area and starts bouncing a little bit, you can also anticipate the bond market to bounce a little bit as well. So, overall, my outlook on the stock market tomorrow is kind of neutral. If you guys go ahead and see the day's trading, there's a distinct possibility that the dollar index could hold on to this level. If it doesn't, then yeah, you can anticipate a strong stock market tomorrow. Otherwise, if the dollar index is able to find some support and a rally to the upside, then yeah, you'll probably see the stock market go a little lower or trade slightly negative or slightly positive, but you certainly won't see much strength in the stock market if you don't see the dollar break below a key level, and that would be the $75.84 area. Now I'm just going to go ahead and review the crude oil market, and the crude oil market is continuing higher, and that's pretty much because the Libyan rebels are getting their butt kicked, and there's and the thing is that we are reaching these ridiculous prices based on speculation and hype. The longer we are in Libya, shooting missiles at them and supporting the resistance organizations, and Gaddafi's still angry at the United States for backing a group of rebels, chances are, you're going to probably see oil prices go up. Even regardless, just regardless of whether or not we have surplus oil supplies. But eventually, when things settle down and the dust clears up and Libya is finally resolved, then of course oil prices will eventually go down to some more reasonable valuations. But for right now, you'll probably see a continued uptrend in the oil market, at least for the short term. But throughout 2011, I'm not anticipating these prices to sustain themselves. As you guys can see, we do have plenty of production, we have plenty in supplies, and this is just hype. All right, so let's move on to the next chart, which is going to be the NYSE Euronext, which is the ticker symbol NYX. And that's pretty much the company that owns the New York Stock Exchange, the New York Mercantile Exchange as well. And pretty much from my understanding is that the NASDAQ OMX, which is pretty much the company that owns the NASDAQ, which is an electronic stock exchange for all of you guys who may not know. The ticker symbol for the NASDAQ OMX Group Incorporated is NDAX. Oh, not NDAX. I'm sorry. It's NDAQ, and basically they're offering to make a bid on the New York Stock Exchange Euronext at around basically somewhere around $42.50. And if that actually happens, which could happen, could not. We have all these issues with antitrust, but certainly I'm guessing NASDAQ came out because they saw an opportunity to buy into the NYSE Euronext, possibly because it's a German acquisition, and I'm guessing a lot of Americans show a lot of distaste towards a German acquisition of the New York Stock Exchange, because after all, it is the New York Stock Exchange. It's what makes New York, New York, kind of. And also, you also have, with my whole thought process on this acquisition is that, either NASDAQ is able to get it at $42.50, or you're going to see the guys that are trying to acquire the NASDAQ, which is basically the Deutsche Börse. I'm not sure if I'm saying it right, but Deutsche Börse. if they want to get it back, if they actually want a chance of getting it back, chances are they're going to have to bid around $45 per share. And of course, that being the case, if you own the NYX stock, chances are you could be at a pretty decent profit for as long as this bidding war continues between the two exchange-based companies. So I think there's some opportunity here. There is some risk, and chances are you're going to see the stock price gap up to 42.50, and eventually it could touch $45. But anything beyond that price is, if you're still holding on to that stock even after $45 per share, I think that's a risk. And also, you're waiting for things to get hairy, and you don't want to wait for things to get hairy inside of a trade. So if he does get to $45, I would take my profits there and then. Anyway, that does it for me for today. If you guys want to keep on seeing these type of videos, just go ahead and subscribe to my channel. If you guys also want to check out the same charting software that I use, please be sure to check out the link right below this video. Take care, folks, and I'll go ahead and see you guys next time.